Good morning, good afternoon, and good evening to everyone, depending on where you're dialing in from. Thank you for joining today's Advanced Corporate Treasury conversation on understanding how sanctions affect your corporate payments. Thank you. My name is Martha Grant, and I'm a manager at Treasury Strategies, a provider of consulting services to corporate treasury departments. I'm pleased to be joined today by Bill North, Director of Corporate Solutions at ACE Software, and is a sponsor of our event today. Bill, can you tell the audience a bit about what you do at ACE?
Sure, Martha. What I do at ACE is I help corporate treasury groups in two main challenges in dealing with technology, and that is payment centralization, and also what we're going to talk about today is sanctions filtering on the corporate side. Glad to be here.
Thanks. Thanks very much. We're also joined today by Michael Heller, Director of Risk and Compliance at Dow Jones. Mike, can you please introduce yourself to our listeners?
Yeah, thanks, Martha. So I cover the Western U.S., Texas, and Latin America for Dow Jones. We help our clients identify and evaluate third-party risk through our content and our research solutions. Typically, I work with clients on their processes for identifying and evaluating third-party risk with the goal of increasing their regulatory coverage, while at the same time hopefully finding efficiencies with respect to time, budget, and resources for their legal and compliance teams.
That's great. Thanks, Mike. So today we will be discussing the key challenges that corporate treasurers face regarding sanctions compliance and some potential ways to reduce the risk and time associated with global payment processing. As an aside, everyone who's registered for this session will be receiving a copy of the presentation and a link to the recording within the next few days. Should you wish to ask any questions during the webinar, you can do so in the question box at the bottom right-hand corner of your screen, and we'll try to address these questions at the end of the conversation today. If we don't get to all of them, we will answer your question via email after the session. So here's an outline of what we'll be talking about today. I'm going to start us off by setting the stage for our sanctions discussion by providing a broad overview of the global payments environment as it stands today. Then I'll provide some challenges that we see our corporate treasury clients facing as part of this landscape. Mike will then next take us back a step and talk us through what sanctions actually are and where they're coming from. And finally, Bill will highlight some ways that we've seen companies succeed in reducing the time and risks associated with sanctions compliance. So let's first take a look at the global payments landscape from a macro perspective. As we all know, companies are operating on an ever-global scale with goods, services, and payments crossing borders and legal jurisdictions every minute of the day, sort of following the sun, so to speak. This means added complexity in terms of additional bank accounts, additional trading partners, but it also leads to greater volatility and risk that comes with working with all these different entities that are perhaps less transparent than some of the domestic partners you may be more familiar working with. Now, alongside this uptick in international payments as a whole, we've seen a large number of regulatory bodies in recent years, resulting in more and more regulations on international trade, on international payments. We're going to take a deeper dive into some of these a little bit later, but alongside these new regulations, of course, comes the consequences of breaking these rules. Now, for years, banks have been fined when their payment screening has failed to stop some of these sanctions transactions from going through. In fact, last week, the French bank Crédit Agricole agreed to pay a settlement upwards of $800 million for transferring money on behalf of some companies sanctioned by the U.S. government. However, as Bill will speak to a little bit later, it's not just the banks that are under the payments microscope anymore, and some of the corporates are now coming under the lens and being fined. Now, in addition to the increased traffic and regulation, we've also seen a lot of volatility in foreign exchange markets continue, and that continues to affect the payment conversions across currency borders when you're sending, payments across those borders to your different partners and vendors. So while it's become in some ways easier and less costly to transfer funds internationally, there's still significant risks involved. Now, looking at global payments on a more operational scale, we've seen an increased push to centralize, standardize, and automate payments as much as possible. The introduction of SEPA, for example, the Single Euro Payments Area, has streamlined some of the cross-border payments in the Eurozone and really helped to increase the use of pay on behalf of, or POBO, in which one entity, such as a payment factory or an in-house bank, makes payments on behalf of another entity or another part of the organization or company. So definitely SEPA and those sorts of tools increasing the use of that centralized payments as a whole. Now, prior to the introduction of SEPA, of course, companies needed to maintain bank accounts all throughout Europe, and each individual country they were receiving or sending payments to. So that's really helped streamline the payments in general. But this drive towards centralization as a whole has not only been to increase efficiency, but also to reduce the risks and uncertainty associated with some of these international transactions. Bill will speak to this a little bit later, but sanctions compliance is just one of the areas that's made easier when an organization's payments are centralized. Now, in terms of payment vehicles and channels and trends there, we continue to see companies moving away from cash and check-based transactions, as I'm sure all the listeners on the phone have noticed as well, opting instead for ACH or wire payments. And the introduction of new payment vehicles altogether, like Square, Apple Pay, and Bitcoin, have really forced retail businesses to change the way that they accept payments from consumers. This, of course, means additional costs to the companies that have had to invest in these new infrastructure in order to accept such mobile payments. I'm sure you know on a daily basis that your own payment habits have changed, and the associated companies have had to change their infrastructure and systems as a result. So now I've given you some context for what the payments environment looks like, but what does all of this actually mean to corporate treasury? The major challenges that our corporate clients face with payments compliance are really around three key themes: visibility, processing control, and risk. Due to the long and constantly changing list of sanctioned parties, most companies will at some point bump up against at least one of these lists. Now, the lack of visibility around violations is really one of the largest sources of frustration for companies that we see, as banks are not allowed by law to explain to their corporate clients why a particular payment was flagged or blocked. Obviously, you can see that this would be very frustrating to corporate treasurers. Now, oftentimes these payments are actually incorrectly marked because they're being sent to someone with a similar name or a similar address to that of someone on one of the sanctions lists. In terms of processing control, these bank filters are extremely sensitive and generate a high rate of incorrect alerts. But corporates don't really have a reliable or safe way of preventing these alerts on the front end. Now, these false positives, as they're called, require Treasury employees to investigate the payment and correct or resend in order to get these issues resolved and the legal payment sent out in order for business to continue. Now, this involves additional cost in terms of both time and money spent going back between the corporate and the bank. It's a big struggle, and as we all know, Treasury departments do not have an overabundance of resources in terms of people and time. Now, from a risk perspective, even if a company is attempting to scan these payments in-house, these constantly changing lists really make it difficult for them to do so and to make sure that they're accurate on a daily basis. And finally, one of the things that we've heard from a few corporates recently is that new language is being added to some banking credit or service level agreements that moves some of the liability for breaches from the bank over to the corporate. For instance, some banks are telling companies that they may receive a fine if they're sending payments that violate or potentially violate any of these sanctions lists. Now, this is up for debate, but it is something that we've started hearing from some of our partners in the marketplace, and something we wanted to just raise your awareness to. So in order to provide some real-life examples, these are a few direct quotes that we have heard from folks in corporate treasury. So, repeat false positives are a problem. Vendors are upset when payments to them are delayed naturally. Really, we're hearing that a lot of manual intervention is required across the board, which causes great frustration, and it is a big time-consuming process. Now, Bill, you've spent the past couple of months speaking with treasurers at Eurofinance, CIBOS, and AFP conferences, as I'm sure a lot of our listeners have also attended those conferences. What have you been hearing from treasurers? Is this kind of consistent with what you've heard as well?
It is, Martha. And in addition to just the false positives and unhappy vendors or payments not getting through, really the main points that I've been hearing kind of center around two different concepts. And number one is I think corporate treasurers are understanding that this is coming and they're going to have to put a program in place, but they just don't have the resources like you alluded to earlier, where banks that have been doing this for years have departments set up to do this and have people in a room checking false positives and doing that. But corporate treasury just doesn't have the resources to do that. There aren't any departments out there that I've talked to, treasury folks, that have so many resources. They just have people laying around, and sure, I'll be happy to check the false positives. They run too lean for that. So it's really, they know it's coming, but they don't have a lot of resources to deal with it. And then number two, the second kind of theme, and this is maybe a bit frightening to me personally, is corporates trying to, because of their lack of resources, trying to almost kind of shortcut the rules. And so I'll give you one example of a corporate treasury professional that I talked to at one of these conferences, and we were having a discussion about have they had any payments blocked by their banks, and they mentioned that they did. It used to be higher, but more recently it's gone down, and I was very curious about how they got their payment blockages to reduce. And they quite forthright told me that they just, through trial and error, they learned what keywords not to include in the payment instruction to let that payment flow through the system. So it's a bit frightening to me. That doesn't really follow the spirit of the regulation. And so we want to really, hopefully this webinar and further evaluations of technology will help these corporate treasury folks really understand that they don't need to do things like that. There is technology out there that can potentially help them. So hopefully we're assisting everybody out there in educating about this.
That's some great insight, Bill. Thank you. Mike, is this consistent with some of the challenges that you see from some of your clients as well?
Yeah, definitely. So as Bill mentioned, the banks have been doing this for well over a decade following the Bank Secrecy Act. And as a result, they're much better situated to handle large volumes of transactions. Corporates definitely feel pressure with respect to budget and resources. So there's a turn to technology and very well-structured data to make sure that you can cover your bases, but at the same time save time with respect to dealing with duplicates and false positives, etc.
Thanks, Mike. Appreciate that. So I think we've got a good understanding of some of the challenges that corporate treasury is facing with sanctions compliance. We know what we're struggling with, but what's really driving these challenges is the next question, I guess. Mike, can you take us back a step and tell us a bit about what sanctions are and where they're coming from?
Yeah, definitely. You'll see on the next slide. Yep. The primary regulation that or the primary area of sanctions that people are most concerned with, at least here in the U.S., of course, would be OFAC sanctions. That's the Office of Foreign Assets Control. That's the part of the Department of Treasury here in the U.S. This is also significant for our listeners outside the U.S., given the fact that a lot of global institutions or corporations both do business here, but also the U.S. regulatory community is very much well known for driving regulatory developments around the world. So you'll see very similar types of sanctions in Asia, in the European Union, in Canada, etc. So focusing on OFAC today, the sanctions block or limit transactions with groups and individuals associated with such activities as terrorism, drug trafficking, and other perceived threats to national security. Essentially, it's also seen as a tool of economic foreign policy. The likelihood of running into OFAC issues certainly increases. Of course, no matter kind of what business you're in, you always have the challenge of detecting third parties who could be on a sanctions list, but they tend to be greater with respect to oil and gas due to the nature of a lot of projects in that industry and where they're located globally. Also other extractives. And then just the global nature of shipping, logistics, and transportation insurance also make or increase the likelihood of potentially encountering a company or individual on an OFAC list. Go to the next slide, please. So, of course, here's always the biggest worry for companies. Headline risk, you can see here in the Wall Street Journal, a Schlumberger unit pled guilty to violating Iran and Sudan sanctions. As a result, they ended up paying $230 million to end the Justice Department investigation into the work in Iran and Sudan. So the fact that it was the Justice Department here in the U.S. meant that it was criminal, so it's pretty serious. It was actually, this fine took place in 2015. The fine itself was actually $150 million, and the reason why I note that is it's the largest OFAC-related fine in the history of sanctions here in the U.S. Banks that we all know have also had some significant OFAC issues, and BNP actually had to pay $8.8 billion, but the actual fine itself was less than what was levied on Schlumberger. So corporates, of course, have significant risk in this area. Other notable violations or settlements for non-banks this year include PayPal. So their issues related not just to doing business with sanctioned countries such as Iran, Cuba, and Sudan, but they also discovered on their own that they had been processing payments with an SDN or a specially designated national on the OFAC list who had been identified as operating in the weapons proliferation world. One thing that's actually, great about what PayPal did was, and then of course, it's very difficult to be perfect in this area, right? And while I, of course, encourage doing everything possible, given budget and resources, to make sure your coverage is as comprehensive as you can, PayPal discovered this issue after the fact. They self-disclosed. So as a result, their fine was about $7 million, significantly less, of course, than what you saw what happened with Schlumberger. Although the regulators noted how they did have some issues in terms of their settings for screening these types of payments, PayPal went ahead and put in place remedial measures to make sure that these types of issues didn't happen again. So I think the lesson is, it can definitely happen to any company, especially as the regulatory environment is changing on a daily basis, and we're all learning how to detect these types of issues. But if you do detect them, there's a way of approaching it that could potentially mitigate your reputational or the fines that you end up having to deal with. And it's not just large, global companies. A smaller company, Navigators Insurance, as well, was found to be on the hook for violating OFAC sanctions due to some business that they were facilitating with respect to North Korea, Iran, and Sudan. Now, I sort of mentioned some of the potential penalties, but here's, of course, a list. Criminal or civil fines, as well as forfeiture. Prison for individuals. Right now, obviously, you can't put corporations in prison, but there is talk, not only with respect to sanctions, but just overall from a white-collar liability perspective of getting senior executives and potentially putting them on the hook for potential violations. Of course, your most valuable intangible asset, reputation. It's always a significant risk, headline risk. And then, of course, increased scrutiny from the regulators. So, if you're found to have a deficiency in your sanctions compliance program, a lot of other regulators might read that and start wondering what other deficiencies you could have in your compliance program as well. And then, of course, and Bill will go into this in greater detail, but there could be a potential risk of challenges to your Treasury relationship with your bank. If you're sending through transactions or sending transactions their way, that could potentially put them in hot water. We can go to the next slide, please. So what I was just sort of walking you through was the traditional sanctions compliance, where essentially data firms or content companies like Dow Jones, receive lists from different official government sources, and we're able to integrate those lists into technology or software platforms so that the names of third parties can run against our data. But in July of last year, OFAC came out with additional guidance that went beyond just traditional list screening, and they essentially came out with a 50% rule, which is now driving sort of due diligence into ownership structure in potential companies or third parties that you're doing business with. And what the Department of Treasury came out and said was, not only are you potentially blocked or limited with respect to companies or third parties that you deal with who are listed on OFAC, on our official government list, but if those subjects have a 50% or greater ownership interest in another company, either individually or in aggregate with other subjects on OFAC, then you should also not do business with those companies. And that's a significant challenge and sea change in terms of the approach. And we all know that internal compliance and legal teams have limited resources. So what at least we did here at Dow Jones was, given the fact that we're a content company and we have a global research team, we of course react to government or changes in the regulatory environment. And we began instantly building our own proprietary list of ownership interests by individuals and entities on OFAC. And to date, we now have over 3,000 companies in that list. And we're seeing a lot of interest and from different companies who want to make sure that they not just comply with government list sanctions, but also this additional OFAC guidance. And it's very significant because, as we mentioned, with limited resources, it's really difficult to go out and start mapping all the ownership interests. There are language issues. Our coverage actually covers 78 different countries. There's also time and resources. It's very difficult without a trained team who focuses on this type of work to build your own internal list. So as a result, we've been able to provide enhanced OFAC coverage. We can go to the next slide. So this is definitely not to scare anybody, but going beyond just sanctions data, there's other information that a lot of content providers build in list form that allow you to screen your third parties against or your payments against. Now, not all of these lists or these categories of risk that are outlined under the data list column on this slide are necessary to screen against at all times. Of course, always consult with your counsel or your compliance team on what makes the most sense. But I just thought it would be helpful for our audience to know what other lists are out there and what sort of regulatory issues that they address. So as you can see in the second column, other lists include, of course, government officials and politically exposed persons. The specific issue that this type of screen tends to address is anti-corruption, anti-money laundering, and the all-important reputation. And of course, it's significant to identify government officials because there's always a potential that doing business with them, improper payments could lead them to abuse or act corruptly with respect to their official government position. Also, as part of the sort of PEP category is relatives and close associates of government officials. As I mentioned, also covers anti-corruption, anti-money laundering, and reputation. We went over sanctions lists, which tends to focus more on trade compliance and very specific screening of payments. Also, typically coupled with sanctions lists are other official lists. So these are denied persons lists, such as the Bureau of Industry and Security for the Department of Commerce here in the U.S. It'd be helpful to know in certain cases, especially from a reputational standpoint, if you're doing business with a company on the World Bank of debarred firms. Spoke to an insurance company that wanted to know if, if there was negative media or if there was other reputational issues with people that they were underwriting or companies that they were underwriting as well. The next area of risk is state-owned or controlled enterprises. Very similar to PEP data. You want to understand if you're working with government officials or government-owned companies. From an anti-corruption perspective, you might have to change the way you interact from an expense policy, especially if maybe a vendor or actually a distributor or an overseas agent has an ownership stake by the government. And then finally, also available in structured data, which you can screen against, would be negative media, both on individuals and entities. And this is always very important for anti-corruption, anti-money laundering compliance, and as I mentioned before, reputation. So with that, I think
now. Yeah, great. A better understanding of kind of the limits we're facing here and some of the data involved. Bill, what kind of solutions have you seen your clients implement in order to address some of the challenges the corporate treasury faces with these sanctions compliance?
So two types of scanning that we see our customers doing when they implement a solution for sanctions compliance within a corporate are really broken down into two different areas. The first is what we call transactional scanning, which are data elements that are more of a one-time event, such as a payment or maybe a letter of credit going out the door to the financial counterparty. And then also what we call third-party relationship scanning, which is really more of a continuous process because these third-party data elements will fluctuate. You'll add customers and vendors and maybe distribution partners or overseas agents. They'll go up and go down, the number of these, on a daily basis. And then, what you really need to consider is what data are you going to sanction or are you going to filter against for these data elements. So it could be OFAC, it could be PEP, it could be company ownership or any other data element based on your industry or geography. But really, when you think about going down this journey in this path of sanctions filtering within the corporate, these are kind of the two most basic questions you need to ask. And as Mike mentioned, we recommend that you work with your general counsel, external and internal counsel, along with your compliance department, and just make sure that you're scanning the right items and you're scanning those against the correct lists. So next, what I want to talk about is some of the considerations that you should take into thought as you analyze going down this path. So I kind of split these up into external and internal, and these are really keeping in mind the end goal. And the end goal is to make sure all hits are identified. But because it's a corporate treasury and because there's not a lot of resources or a lot of extra money, we want to make sure they're identified at the absolute lowest cost possible. So some of the external considerations are, like we talked about, use the right list for your company and the geographies and industries that you're in. Make sure the lists are updated regularly, and that is we really see the value of a data provider. That's their core business, updating the lists. I know there's even some customers out there that want, for example, the OFAC data updated every 8 hours. That's possible with technology now and data providers. Really, the third external consideration would be to make sure when you onboard your third-party relationships, make sure you're capturing that required information. And also, as that data gets updated, make sure that it's updated in a central location because, again, if part of that data is missing or you don't have the address or you don't have the proper ownership name, then that could be missed when you send a payment out there or you may be doing business with someone you don't want to be doing business with. The internal considerations, we've talked about this false positive rate, or FPR as we call it, and I'll get into a little bit more detail on my next slide. But again, every false positive costs you time and costs you money, so you want to make sure they're minimized. Second point is really putting this into context, putting sanctions filtering into context into a bigger kind of exception and investigation policy that's been approved by your upper management and maybe actually part of a bigger enterprise risk policy that you have in your organization. And actually, Martha, as Treasury Strategies does a lot of work in this area, I'd like to get your thoughts on how kind of sanctions filtering would fit into that overall policy.
Sure, Bill. So we often help clients write counterparty risk policies or overall risk policies as part of their kind of documented procedures and policies as a whole. And we would probably see this sort of thing fall up into either a counterparty risk policy or enterprise risk. You'd want to see, your limits, your risk tolerance in there. And then one of the most important things and one of the first recommendations we often make to our clients is, you may have these procedures in place, but make sure you're really documenting them so that on a daily basis, when these exceptions come up, when these false positives come up, your employees know what to do and who to go to and who is ultimately responsible for overseeing that compliance. The compliance officer who is in charge of the policy and of the area. That's kind of what we would talk about.
Okay, thanks, Martha. That was helpful. And then the last internal consideration is really the concept of centralization. So, we've worked with a lot of Treasury groups that have gone through a centralization initiative, whether that be the entire Treasury department or maybe centralizing certain processes, maybe centralizing their payments. And what we found is that will absolutely enable a much smoother transition into the sanctions filtering process because, if you've got one place where you're centralizing and then sending payments out or letters of credit out, for example, it's that much easier to be able to filter these data elements in your third-party relationships against these sanctions filtering engines and be able to do it in a single place and so you can get all the right information and up-to-date data. So next, I want to talk about these false positives that we keep talking about and give you a real-world example of why these can really kind of create a lot of extra time and resource spent that may be unnecessary. So this is an example. On the left-hand side, you'll see in the red box, you'll see an original payment instruction that one of our customers had put through their previous filtering application, and it was flagged as a false positive. So let's go through the payment instruction. You'll see that it's going to a bank in Seoul, South Korea. So for geographic reasons, this payment should not have been flagged as a potential sanctions hit if it's going to South Korea, just based on the geography and address. But their address, as you can see in the street designation, is 189 Tehran Row Boulevard. So the text string Tehran creates a false positive because in this case, the previous technology just saw that string and said, oh, Tehran, this could be going to a city in Iran, which we know is still under sanctions, although those might be probably going away here at the beginning of next year. But it was flagged, and so it created a situation where someone had to go investigate that, look into this payment instruction, and this payment instruction was one of probably 10,000 payments going out in a batch. So there was a lot of time and resources spent investigating this. what we think is, the technology should really bring value in this situation in the fact that it really just needs to put the text string of Tehran into context, right? So the way we would look at this is, okay, fine, Tehran is in the address designation, but it's followed by the letters BLVD, which means it's a proper street designation, boulevard. And then we know that Tehran Road Boulevard is a valid street in Seoul, South Korea. So the technology can flag you and say, hey, here's a payment. We don't think it's a hit because in context we understand it should be a valid address, but just wanted to let you know. And so again, you don't have to spend your time and resources investigating that false positive, and you'll be able to keep your costs low. So let's summarize next in kind of what value and benefits that a technology solution can really deliver to a corporate treasury as they go down this journey of implementing a sanctions compliance program. First and foremost, we want to be able to get all the hits. We want to make sure that there's no transaction leaves the organization that could potentially be a hit for any type of sanctions violations. You don't want to be the company, like Mike said, to be on the front page of the Wall Street Journal, at least for the wrong reasons. I'm sure there's some good reasons you'd want to be on the front page of the Wall Street Journal, but not for this reason, definitely. Reducing your payment delays. You don't want to have any payments blocked for unnecessary reasons, right? You want to make sure your vendors get paid and even your employees, right? We've heard of payroll payments being delayed because of this, which obviously no one wants. Eliminating the OFAC violations risk is exactly why we're here today and why we do what we do. But also, like Mike said, the reputational risk, and I'll talk a little bit more about the relationship with your banks. And so this is really, really important, I think. Proving that you have a sanctions compliance process in place, I think gives greater comfort to your banking partners in saying, listen, the transactions that we send to you have already been through a filtering engine. We know you're going to put them through yours anyway, but hey, they've already gone through a first phase of this, and so they should be much less risk than maybe transactions that didn't go through a filtering engine. And we found that banks really, really like that, and so hopefully it'll benefit the relationship between you and your banking providers and keep both of you off the headlines in the Wall Street Journal that no one wants to be on.
That's great, Bill. Thanks. I think those are really, you're able to provide some kind of great food for thought on some of the solutions to help reduce some of the headaches that some of our corporate treasurers are facing here. We've got a few questions that have come in, and I think we've got some time to answer a few of them. One is, why should I screen payments on my end if my bank already does this? Bill, I think you've probably heard this question before. Would you be able to speak to that one?
Yeah, I think so, Martha. And yes, you're right. I have heard this question. It's a very popular question, especially the last couple of months as I've been going to these conferences. And really, what I tell anyone that asks me that question is really, although the banks, again, have been doing this for years, and by and large, they do a pretty good job of doing this. But like Mike talked about, there's potential civil violations. There's criminal penalties that are being discussed, reputational risk, and we just feel it's a much better situation for the corporate if they put a program in place and then just depending on a banking partner. So you're basically putting your company's risk and reputation in the hands of something that you can't control, and even if something happened, you would never get an explanation for it. So for those two reasons, really, keeping and managing the risk internal, and also making sure to understand exactly why any potential hit would be a hit, I think are really, really important, and I think those are the two reasons.
Thanks, Bill. That's great. It's really helping your relationships with your banks, taking control of the due diligence, and having that extra layer of screening. That's good. Another question we've received is, how and where would I start implementing a screening process? I'd be happy to take that one on. So I think if you're thinking about taking the screening, in-house before screening these payments before they're going on to the bank, as we talked about before, you'd really want to look into your policies first and who's looking over this overall. So, you know, where does this responsibility ultimately lie within your company for sanctions compliance and for compliance of these kinds of rules? So, you know, do you have a compliance officer who oversees this? Do you have procedures and policies documented that tell employees step-by-step what to do in the event of a payment block? That's something you definitely want to start with. Reviewing the risk limits, risk tolerance you have within the company, that should all be set out in your overall risk policy and counterparty risk policy, as I mentioned before. I think next you'd want to look at your repetitive monthly payments as well as once-off payments in the recent past to see where your needs might be in terms of what geographies you're regularly sending payments to, and what sanctions list you might be bumping up against on a frequent basis to get an idea of kind of the landscape of where your payments lie. And I think finally, you have to decide, whether you want to screen within your department altogether, whether you have enough resources to do that, or whether you want to go out and try to get a partner, a technology partner, to help screen before sending your payments to the bank. I think that's probably the last decision you need to make. So another question we have is how often is sanctions data updated? Mike, would you be able to answer that one for us?
Yeah, definitely. So, I can't necessarily be prescriptive just because there are a lot of different variables. However, there are three main factors to consider. First, depending on the government source or the government list, how often does the government update their list? The second is how often does your data provider then scrape those lists or update those lists for integration into the screening platform. And then the third consideration is how often do you then screen your third parties or payments against that data source? I can just give you an example. It's definitely not a one-size-fits-all model, but with respect to OFAC, which tends to be of very high importance to our clients, we offer a solution for payments that is updated every 8 hours. But there are, of course, different variables depending on the data sets or the sanctions list, as well as your type of third-party population.
Thanks, Mike. That's great. And thanks to Mike and Bill. That really concludes our session today. We hope we're able to provide you with some valuable information on sanctions compliance and how you can kind of improve and get some solutions there. So please feel free to reach out to any of us with any further questions. Thanks to Bill and Mike. Thanks for joining us.